As someone who doesn't live in California now, but I'm still young and I would love to live in California. I don't know, man. I don't know. Seriously.
You want to switch over officially to the tax topic of California? Yeah. That could be a while, but let me tell you something.
Well, there's lots of different things. There's the income,
yes,
the potential wealth. There's different things.
Yeah, we're going to talk briefly about both of those. And just a quick disclaimer, we're not tax experts. We're not medical experts. We're no experts on anything here. We're just chatting. Actually, we're experts in digital marketing, which is the one thing that we're not.
At least we pretend to be. But
yeah, we read a lot of stuff on that. But we're not talking digital marketing now. We're actually talking taxes in California. And so, like you said, there's...
Yeah, but it doesn't take an expert in taxes to say, holy shit, California's state taxes are double Arizona's.
They have the highest, with New York, the highest state taxes right now. But that's not enough. They want to increase them. So to the point that I think they have like 13.3 now, and then they want to increase it as much as 3.5%.
Yeah, they want to go up to 16.8. That's so high.
16.8% for the highest income earners, which is they're gonna scale it up from 1 to 2 to 3 to 3.5%. The top income earners, which is for California, is 5 million and above. They're gonna increase 3.5% their state income taxes. Okay, this is nothing to do with the federal income taxes, which brings them to a 16.8 bracket. In addition to the federal income tax, which now also Biden wants to kind of go back to the old brackets that Trump lowered and go back to the 39.6, I think is the top bracket. So basically, you live in California and you are a top earner, you're going to be paying close to 60% basically of income tax.
It depends what you do. Because if you're a top earner, like, this is why, by the way, like, doctors get screwed. Because doctors, first of all, are employees most of the time. Unless they have their own practice, they're employees. So they can't even have the advantages that a business owner has as far as the tax code go. But they're high earners. So if you work your ass off to become a surgeon and go to years and years of school and all that shit, do your residency, all that, and now you're finally a surgeon, you're making really good, $300K a year, whatever, you're going to pay 60% in taxes and you get fucked. And you can't deduct shit. You're not even a business. At least businesses have different advantages that they can use. If you're an employee of a hospital, right, if you're a surgeon at a hospital, you're fucked.
Anybody with a high income salary, whether it's attorneys, doctors, lawyers, whatever. I mean, even company CEOs, whatever, that are basically employees of their own company. Everybody that is a high income earner basically is.
But at least the CEOs can kind of.
Yeah,
finagle.
But not only
lower
that,
your salary and do other things.
Keep in mind, this tax is also applied to capital gains. So
yeah, that's crazy too.
Exactly.
Well, but the other thing too is, so all I was going to say is, so it depends on what you do, your taxes. So if you're let's say you are a founder and you found a company and your company is now successful and you're in the highest income tax bracket, but now on top of that, potentially, even though you don't have any realized gains, just your paper shares.
You're talking the wealth tax now?
Yeah, the wealth tax.
Okay, that's different.
Because now on top of that, they're proposing a wealth tax.
Yes.
And if you have a company, which is so crazy, because here's my question, right? This happens all the time.
Well, let me back up a second. So
okay.
It's two different propositions here. The first one is just
the income is almost certainly happening.
Yeah. The income. That's the thing. The one of the caveats of this, I think I wrote it down. Is that's AB 1253. That's a proposition. If they approve that before August 31st, which is basically a week and a half away, it will be effective retroactively, meaning that if you are in one of those brackets making more than $1 million a year in income, basically this is income taxes, this will apply to you for any income you've made since January 1st, 2020. So if you're reporting your taxes, whether it's estimated taxes or calculating your taxes or whatever planning you do for the year, you will be paying an extra up to 3.5% in income taxes for the state at the end of 2020, or basically when you do your taxes by April 2021. So this would be retroactive too. It's not something they say, okay, well, we're gonna do this, and then you start applying to 2021 or whatever, and you can do a little better tax planning for yourself. No, this is whatever tax planning you did at the first of the year with your income and everything else that you have in your family or whatever, doesn't fucking matter, because they're gonna make it retroactive. So if they approve this by August 31st, like I said, 10 days away, you will have to pay anywhere between 1, 2, or up to 3.5% more state income taxes than you were used to pay. So that's exactly how this is going to work. So you can go from 13.3 if you are the highest bracket to 16.8, just like that.